back. Still watching Business Morning live on Channels Television. Let's drill down now in the commodities market. We have Clement Igbanubo, economist and financial derivatives company, joining us right here in the studio. Great to have you.
Thank you so much.
Yeah, so I was talking about the oil market earlier on in the show, and I see volatility is still very much present in that market. I see the oil prices are up this morning. What's driving sentiment today?
Yes, in the global market, investors are weighing in on different options, weighing in on the news and the expectation of what will happen next. So you have a lot of global economies experiencing slowdown here and there, and their expectation that it may go further than we think, and also their expectation that the Iran deal will be successful, and then that will lead to increase in supply, and then it means that the price of oil will come down. So there are a lot of expectations in the air, and those things are driving investors' sentiment.
Yeah, so much expectations, and
so
I'm looking at, I'm fast forwarding to the end of the year. Where do you see oil prices?
What we see the end of the year 2020, oil price will not be less than 90.
Not less than 90.
It won't be less than $90.
Okay.
Because we are not seeing any significant improvement in the supply chain in the near term. So whatever you're going to see in terms of improvement in supply, because you know that for you to increase the supply of oil, it takes a whole lot. It takes a whole lot of lag to increase that supply. So currently what we have, the end of 2022, we are not going to see so much pump into the market. So the price will still be hovering between 90 and 100.
And we see Saudi Arabia making some comments. I saw earlier talking about actually not getting that much output. We saw that actually, have an impact on the price.
Yeah, because it pays the oil producers to have less output in the market so that the price will be higher.
Since the oil producers are enjoying that price,
they're enjoying,
they want to keep it elevated.
Yeah, of course. If you do the same as a businessman, but unfortunately for Nigeria, it's a different ball game, it's a different story altogether. Because if you look at the Nigerian figures, you discover that from January 4th till date, oil price has gained not less than 20%.
Right.
But exchange rate has depreciated more than 21%. And external reserve has also lowered more than 4%.
Right.
So you see that it doesn't appear Nigeria is actually gaining from the windfall.
And I guess that's why those oil companies need to be charged that windfall tax we've been hearing about in the UK, because they're the ones profiting from all of this. We're seeing rising energy costs, globally, and consumers are being squeezed, at this point.
Of course. You remember when even Biden was even charging the marketers in the US that they're even part of the problem, keeping the prices high. So it's really a windfall time for them in Europe, in the US, and other places that are not net oil exporters. It's unfortunate that the story is different here.
Yeah, quite unfortunate.
The subsidy story and all of that. Yeah. So our money is just going another direction that is just a deadweight loss to society.
It'd be nice to hear a different narrative at some point. But natural gas, that has surged this year about almost over 100% this year, talking about natural gas. And we're seeing Mozambique there exporting the first LNG. Tell us more about this.
Yeah, sure. I think the natural gas is the next big deal. And I think that is where Nigeria needs to reposition itself. But unfortunately, I don't think we are really taking that trajectory. Because Nigeria has the highest proven natural gas reserve.
We've had talks with Europe.
The talks are there, but the fears are there also. Because, the kind of insecurity you have in Nigeria has to do also with the oil activities and all of that. The communities are agitating. Yes, you have the PIA, but was that the real consensus? And so the communities are still not comfortable. So you're having oil theft here and there, pipeline vandalization, force majeure here and there. So when people that are already on ground, the IOCs are enforcing force majeure, how will the new investment come in? So there are lots of issues there in the oil sector. For example, you discover that, yes, Nigeria has the highest reserve, more than 200 trillion feet, right? While Mozambique is about 100. Mozambique, it was just around 2010 that they just make that big discovery. And investment just started about 2017.
And they're already exporting.
They're already exporting because the dynamics are different. The fiscal incentives are better there. And yes, you have pockets of insecurities here and there, but they are well defined. But here, they are not well defined. Look at the minister was telling us that we're losing 400,000 barrels a day. You know, that means that if you stretch it, you discover that 400,000 barrels we are losing in a day. It means that in a year we are losing more than $15 billion.
That's a lot of money.
And that's a lot of money. And nobody wants to do that kind of business. So they want to come in, but the feet dragging is still there. And that means there is a whole lot that we're going to fix in order to ensure that that investment, that we take advantage of that investment in oil, in gas, because that's the new end thing.
That's a new thing right now,
sure.
And we know Europe is in dire need of all of that, and they're trying to make deals
everywhere that they can make that deal.
So this is the time to actually key in for Nigeria. All right, let's look at China now. We see their property market. That market has been quite volatile for a while now. We're seeing they're slashing the mortgage rates. Why are they doing this?
Yeah, sure. You know, China has a different problem from what the whole world is passing through. You discover that you're talking about inflation here and there, and people are raising interest rates. That's not the case in China. In China, inflation is 2.7%.
It almost seems self-inflicted.
Yeah, of course. The COVID, and then the
zero tolerance.
Exactly. Because they have that zero tolerance for COVID. And also, you know, the real estate is actually having their own challenges at this time. So China is quickly losing momentum. And so they need to do something quickly. If you see, in the past 10 years, China has grown on average of 6.7%. Just first quarter of this year, they slowed 1.4%. And last quarter, that's the quarter two, the economy contracted 2.6%. And so if you look at consumer borrowing, in fact, the official figure from China is saying that between June and July, consumer borrowing slumped from $124 billion to $18 billion. And investment borrowing, that's corporate borrowing, slumped from $344 billion to just $42 billion. So the consumer sentiment, the confidence is negative, the investor confidence is negative. But also in the property sector, in the mortgage sector, you discover that about 2 months ago, they protested and said, we are not paying our mortgage again, you know, because, of course, you know, in China, it's not an option to default, because you'll be listed, the debt list, you know, and that's messier for you. So they protested, we're not going to pay. Because a whole lot of things went into that sector because of the cheap money they got at a point in time. And so there was so much, the real estate deal was so much that, in fact, some of the real estate companies were even going into other investment, into electric cars, into other, because there was cheap money for them too. And so it ballooned. And of course, you know what happens when you have bubbles.
Oh, yes, you have
and
that
so
bubble.
the bubble is busting now.
Right.
You know, and so, but they need to keep the momentum. They need to have a
and they also had that Evergrande issue.
Yes, you know, Evergrande is, I think, that the main dealer in the entire deal, because even Evergrande, they entered into electric motor. They even bought a football team.
Wow.
Yeah, because that was cheap money. And you know the way they do what they do in China is you go to an area where you have piece of land, you buy those lands, and then you sell them before you build on them.
Right.
And so people have purchased, pay 30%, pay 50% for those lands. Now
so they need to have the finish.
But the economy is slumping. There's no money. Because when people are not purchasing, it means that firms won't be able to also produce, because so when you produce and the inventories are there, you can't go that. So you see the turnover rate is already low, and then what it means is that there's going to be layoff, and so the money is not there again for even them to pay off what they have started paying. And at the time they make those purchases, they were at a very exorbitant rate because of the bubble, you know. So now the chickens have come to roost. and they need to realize the real true value of that market.
I'll keep tracking that market. Let's see what's happening with some agricultural commodities now. We see cocoa. We have a National Cocoa Management Committee to regulate that sector. What can we expect from this?
Well, one can say good news.
Okay.
Nigeria used to have a cocoa board before, management board before, in the 60s, and then it was later disbanded because of issues of transparency, corruption, and all that. But here we are trying to go into that, a bigger deal again, because, you know, if you look at Ghana and Ivory Coast, this living differentials, you know, because what they do is, that's okay, you are producing cocoa, but we want to encourage you to produce more. And so this is the market price or the floor price. Okay, so if you sell 1 ton, you get 1 ton, you're going to sell at this price, we'll give you extra $400. So that premium is going to encourage people to produce more. And so that is actually having some impact in Ivory Coast, in Ghana. And, you know, that also is a kind of stimulating smuggling in Nigeria, because some people producing in some border countries could also take it to Ghana and take advantage of that premium. So Nigeria now is actually planning to go into that initiative, which will encourage cocoa production. Of course, you know, if you look at Nigeria cocoa production, Nigeria's yield is just about 2,600 hectograms per hectare, while in Ghana you have about 5,500 hectograms per hectare, and in Ivory Coast you have about 4,700. The total output for Ivory Coast is about 2.2. All right, Nigeria is just 340,000. 2.2 million for Ivory Coast, 340. But Nigeria has total farmland, agricultural land, of 70.8 million, while Ivory Coast just have...
So with the little they have...
They just have 20.8. You know, people are doing much more. But that's not just the end of the story. It will be a bigger news if we begin to think about the global value chain. Africa produces about 79% of cocoa in the world globally.
And we're not making that money from
chocolate.
But
we are not processing.
Yeah.
In fact, just grinding is just only 90% that Africa does. And so you see, the entire value chain, the global value chain, we are just occupying a tiny space. All right? And so we lose so much money. So I think beyond the committee is, how do we take advantage of the global value chain? How do we go into processing? How do we go into kind of integration to these smallholder farmers, so that, first of all, we ensure we're going to get higher yield, but also we're going to process this, because that is where you can get much more foreign exchange earning. But that step is the first step in the right direction, because oil is no more dependent.
So we need to see more steps.
We need to diversify.
Exactly.
Oil is no more dependable today.
Yeah, everyone is transitioning, you know, trying to transition at this time. We're seeing more electric cars, yes, you know, popping up, and people are buying more electric cars at this time. So how are the domestic commodity markets looking?
Yeah, fine. This is a harvest season, and we expect that there's going to be moderation in prices in the domestic market. But of course, we know we have our legacy constraints. You know, the insecurity. A lot of people cannot go to their farms, and so that reduces the land space that is farmed, and so that's also going to reduce the yield, what we're going to see in terms of output in the market. But overall, we expect that there will be moderation in prices of domestic commodities. But remember, when you begin to compare with 2021, it will still remain elevated.
It's still elevated at this point, and it's quite a struggle, because we're seeing all these commodities selling at their premiums, you know, at this point, and at a time where you know, consumers are squeezed. And I'm wondering, how far can the Nigerian consumer go?
You know, one of the things that these people think about in the market, because consumers are economic agents. This reasoning is spontaneous. When they sell their commodity, they're going to go to the market and buy TV sets. They're going to go to the market, you know, they're going to pay school fees and things like that. Right. And so while the prices of other commodities are skyrocketing, they have that already in their programming, that after selling, I'm going to go to the market to buy. So that is going to influence their pricing. All right. I remember the last week of July, when Naira raised to about 717 per dollar. I went to the market, and you see the way prices were changing. And what is it? When we finish selling, we're going to go and buy. And dollar has increased. It's selling the old stock, because expectation is what drives the market. And for that expectation, they have started repricing, their products in order to make sure that after selling, they are not thrown out of the market.
Right.
So you see, so all of those things will come to play in determining what actually the market prices will be.
All right, we'll keep tracking those markets.
Yeah,
Thank you so much, Clement Igbanugo, economist at Financial Directors Company. It was great having your perspective.
Thank you so much. It's my pleasure.
All right, we'll go to break now. When we come back, we'll drill down on the markets. That's in a moment. Just stay with us.